The energy crisis. Brent Crude has officially crossed the danger mark, testing $110 per barrel. This is no longer a spike. It is a full-blown energy shock as the Strait of Hormuz remains a geopolitical tinderbox. The inflation bomb back home. The 8.3% WPI inflation and today's sudden 3 rupees per litre fuel hike have sent a clear message. Inflation is back and it's aggressive. The currency collapse. The Indian Rupee has hit a historic, bone-chilling low of 96 rupees. This triple threat is the heavy anchor that will dictate every move in Monday's opening session. Resistance Masterclass. Yesterday I gave you a specific resistance at 23,800. The market respected it to the tick, peaking at 23,839 before the massive reversal we predicted. The benchmark success. My 23,700 benchmark worked as a true line in the sand. Nifty's failure to close above it confirms that the bulls have lost their grip on the immediate momentum. The trap revealed. The morning rally was nothing but a liquidity trap. While retail traders chased the 23,800 breakout, the big boys were dumping their positions into the strength. Geopolitical and global pulse. Hormuz blockade. The risk of ship seizures in the Gulf has added a massive war premium to oil prices. If this continues over the weekend, expect a gap down on Monday. The dollar dominance. Safe haven buying has pushed the US dollar index higher, sucking liquidity out of emerging markets like India and dumping it into US treasuries. US yield pressure. With US 10-year yields sitting at 4.49%, the cost of capital is rising globally, making Indian equities look expensive at current valuations. Domestic reality. The fuel punch. Today's 3 rupee fuel hike is the first in nearly 4 years. This isn't just about petrol. It's about higher logistics costs that will hurt every listed manufacturing company. WPI breakdown. With the fuel and power component of WPI surging by 24.7%. Corporate India's margins are under a mechanical press. FII exodus. The data is clear. Foreign institutional investors are using these rallies to exit. Do not make a bounce for a trend reversal. Sectoral feed and market breadth. Hollow gains. Despite Nifty's morning green, the market breadth was negative. If the majority of stocks are falling while the index is up, the rally is fake. IT sector drag. IT remains the weakest link. As long as US yields stays above 4.4%, do not expect any miracle recovery in tech stocks. Banking fatigue. Banks tried to lead but failed at the top. This exhaustion suggests that even the heavyweights are tired of fighting the macro data. Monday action plan and levels. Immediate support. 23,400 is your line in the sand. If we break this on an hourly basis Monday, we are heading straight towards 23,200. Crucial resistance. 23,700 is now the immediate wall. Until we reclaim this with volume, every rise is a sell on rise opportunity. The verdict. Monday is a day of capital protection. With oil at $110 and the rupee at 96, don't be a hero. Protect your funds, and I will see you at the Monday wrap up.